Good morning, all. Camelback Trading 2724 coming to you this Tuesday morning, May 26th. We're looking at the last 5 days of the market profile of the SPY ETF here on Window Trader and where we are trading now. And a lot of times you say, well, what did the market do? And sometimes the more important question is, well, what didn't it do? And last week's a perfect example of what it didn't do, as after gapping higher Monday on a huge gap like we're doing this morning, we traded sideways for 5 days. Bears had their opportunity 3 out of the 5 days, dipped their toe into the large gap on Tuesday, tried on Thursday and Friday, couldn't even take out Tuesday's low, let alone to get into that gap. So what do we see this morning? We see after 5 days of balance, coming out of balance again on a huge gap upwards after the bulls rest up. Inside month up firmly with 4 days to go. Weekly gap higher, daily gap high. It's two different gaps from both the daily and the weekly this morning. Average volume only 96 million, and right now this morning we've only done 1.2 million so far, so nothing crazy again as we continue though to go higher, right? Doesn't matter what we think, it matters what is in front of us and how we trade it. We're up 2% this morning. Do gap rules apply? Not in my universe, they don't. I don't think I want to be a buyer up 2% up here when the entire overnight inventory and pre-market is long. On the flip side, I don't want to be a seller up here because we have a void in price as we are above the 200 right now. So what's the best course of action? For me, it's certainly to wait for the initial balance to form, at least a period. Our destination's on the upside right now. So there's just over an hour to go prior to the opening. I'm just going to use 298.78 was the daily high, but 300.01. I will still use that. We're $1 above it, but I'll still use 300.01, which would fill the gap for March 6th. So in just under 3 months, we went from over 300 down to 218 back to 300. Love it, right? Now, above there, we have our pre-market high as of now of 301.81. Then we don't have anything to an afternoon rally high of 304.18 for March 5th and a daily high of 308.47. So again, we have a huge void and vacuum in price. Now, do I think it's going to just go straight up there? Absolutely not. We see the tendencies when this market grinds higher. We gap higher, we trade sideways, they try to push it down, and then all of a sudden we're trading $4 higher a week later. So that's the tendencies of this market for the downside. Right now, my pre-market low of 300.11 would be my first downside destination. Then we won't have anything until, the weekly gap gets filled at 297.87. Remember, that was a weekly high and a poor high, right? That was Wednesday's high. So it would be my next destination on the downside to fill the weekly gap, and then the daily gap fill from Friday, 295.63. We went out with a price probe being firmly accepted, right? K's high of 295.45, and obviously I'll just stop there for now. So what is the game plan? Well, like I just said, it's kind of silly to say gap rules apply, and I'm just going to go long as soon as the market opens. That's foolishness on anybody's part. So we let the market open, we see how it reacts, we see how it reacts if we dip down to the 200-day moving average, which I'll show you on the charts will be above. We'll see if we get down to the pre-market low. Again, maybe you go back and forth through the opening. Maybe we never see the opening again on one side or the other. That'll give you better indication what you want to do. But patience is certainly the key. There will always be a trade. Do not go looking for it. If you're in my voice channel room, you will know at 9:30 what I'm looking for at that point, and again, as the market is evolving. Chart-wise. So monthly. Inside month up, we battled in and out of it all 5 days last week. Well, as of right now, we're firmly above it, right? Last month's high was 294.88. So right now we're $6 above it with 4 days to go in the month. We're in balance and above the trend line. Weekly, I said I was still going to call it balanced to up. Well, right now we're gapping higher. So we're going to be firmly up in the weekly. Now here, 287 was a huge point for me, right? But so is this one up here, which is 302.23. Because if you notice, every time we got above 287, since 2018, that also became a little bit of a ceiling to get above. We never even got near it here or here, but we got near it back in July of 19, backed off. We got back up to it. September of 19, backed off until finally, we got above it in October of 19. So I would think around we could round it out, 302.23, 302.46, around the 302.50 level. So yes, there's a void in price above us. However, I think the 302.50 level, if we're to get to it, could be a point where the bulls will take a rest. But the weekly is firmly up, with the gap being my main focus. And then on the daily, same thing. We're blowing up to the upside out of a 5-day balance. 200-day moving average, I'll just round it. It's below 300. 299.50, we'll just round it out to 300. We're closing this gap for now. Void in price up to that next 308.47 level. But again, I think the 302.50 level should provide some kind of a speed bump for the bulls if we are to get there. Come check us out at camelbacktrading.org. Have a great day trading, and we'll recap at 4 p.m.